Okay, it's interesting. So good opportunities for speculators here, consolidating assets, building better companies. That's all good news, right?
Yep.
Hopefully when the teams merge, the top talent survives that merger. And that's all well and good, but at some point you got to roll up your sleeves and find more stuff. And so let's talk about exploration.
Yep, that was a wonderful segue.
Yeah, I mean, you got to, right? You
Yep.
got to find more stuff eventually. And so that's the third area that you're interested in, prospect generators.
Albert, I would argue that the mining industry has underinvested and misinvested, both, in exploration since the middle part of the decade of the 90s. Underinvested simply because the industry came to be managed by financial people rather than exploration people. And financial engineering became more lucrative than exploration.
Now, was that because that's what was needed, though? Sometimes they goes in phases, and maybe the financial element was lagging. And so we played some catch up for a while.
Absolutely. We had invested as a society in exploration fairly aggressively through the decade of the 70s and the 80s. And through the 90s, we were able to live on the accumulated investments that had happened in the 2 decades previously. So as you suggest, the market actually worked. The market did what it needed to do.
Yeah.
The consequence, however, of underinvesting in the period 1995 to present is that there is a dearth of explorationists. That is, there's a lack of intellectual capital, and there's a lack of exploration targets. The second thing that happened is that junior capital markets changed over time, and there became an ethos to explore for market capitalization. In other words, the value proposition, particularly in Canada, went from being rocks to money to rocks to stocks and stocks to money. So too many times exploration involved taking over a project that had failed in 3 prior cycles and drilling a hole right next to the only good hole that had ever been drilled on that project so that promoters could take a stock from 15 cents to 45 cents. No real hope of achieving exploration success. It wasn't about making a mine, it was about making a market. And literally billions of dollars were wasted. So on the one hand, the industry underinvested, and on the other hand, the industry malinvested. And now the chickens are coming home to roost. Without naming names, March of last year, I was at a social function in Vancouver, and the CEO of one of the largest mining companies in the world, who I know reasonably well, came over, sat next to me, and started laughing. And he said, "Rick, right now you got me right where you want me. My board has asked me to increase our exploration spend, and frankly, we don't have an exploration pipeline, and we don't have the exploration capital to build on a timely basis an exploration pipeline. So anything that you could suggest to us would be of benefit. We want to do business." Now, that means that I see a fairly bright future for exploration generally. But exploration, as you've learned in your time with us, is an extremely, extremely risky business. I was taught in university that 1 in 3,000 mineralized anomalies becomes a mine. In an arithmetic sense, you're an engineer, that means that you have a 1 in 3,000 chance of a 10 to 1 return. That makes the California lottery look like a hell of a deal. My friend Brent Cook says that by associating yourself with competent, serially successful management teams, and importantly by paying attention after you have the third dimension, a drill hole, that you can lower those odds dramatically. And he's right, to about 1 in 100. Still a tough deal. Still a very, very tough deal. Interestingly, there's a variant of exploration which I call prospect generation, and I'll get into what it is in a minute, but I want to give people a reason to listen. I have, by my reckoning, invested in approximately 65 public prospect generators in 35 years. I've enjoyed 22 economic successes and 21 takeovers, which means that rather than a 1 in 3,000 chance, or in Brent Cook parlance, a 1 in 100 chance, I've experienced 21 successes in 65 or 66 starts. That's incredible. That's 3 standard deviations, as I understand it, better outcome than the 1 in 3,000 chance. Now, how does this happen? Prospect generation involves a process, not a property. regarded as an intellectual capital business. Again, you're an engineer, a technology engineer, so you know what we're talking about. Exploration really is an intellectual property business. It's about developing a thesis around a piece of land, proposing a methodology to test the thesis, applying that methodology, and answering a series of unanswered questions.
Yeah.
The prospect generators recognize that. They're exactly like small companies here in San Diego that are working on a molecule or working on a piece of software,
Yep.
that are working on some chip technology. When they demonstrate the thesis, they bring in a senior partner to fund the heavy lifting in return for a carried interest in the revenue stream. The
Right.
process is exactly the same. So a prospect generator in the mineral exploration business would use their own intellectual capital. Perhaps they're superb at porphyry copper exploration. Perhaps they know more about ultramafic deposits, or they know more about Central Africa, or something. And that intellectual expertise is recognized by the industry. These people will develop an exploration thesis, lease or otherwise acquire a piece of land, propose the methodology to test the thesis, and then bring in other people to do the financial heavy lifting associated with testing the thesis. And they'll do it again and again and again and again. Right. From my viewpoint as a speculator, what I'm trying to do is, rather than buy one lottery ticket, which is what most drill hole speculators do, I'm trying to get a bag of lottery tickets.
Yeah.
Or more properly, a bag of partial lottery tickets, because I end up with maybe 30% of the property.
Right.
I'm looking to have a portfolio of 10 project generators, each of which advance 3 or 4 properties a year, funded by other people's money. So I'm getting 40 or 50 looks a year,
Yep.
funded by other people's money. I'm diluting my interest in the property where I have a low probability of success, but I'm not having to issue shares in the project generator, because the real value in the company is the intellectual capital. I don't want to diminish my share of the intellectual capital.
Yeah.